Hello, this is Steve Malone with ComsFX. I hope you're doing well today and you're getting some good trades. In yesterday's video, I had mentioned to look for the dollar CAD to potentially push up toward the 107.50 level. Well, sure enough, it did just that. Given Fed Chairwoman Yellen's testimony before the U.S. Banking Committee, she had mentioned that the U.S. economy was indeed doing better than the Federal Reserve had expected. And also given her less than dovish comments, it drove the dollar CAD up towards that 107.70 level when we saw the U.S. bond market, the 10-year U.S. Treasury, move up beyond the 2.57 level, and it dipped back a little bit, but it's been holding right about that 2.5 to 2.56 level. So I'm anticipating a push higher yet in the dollar CAD. So let's take a look at what I was looking at yesterday, and we'll talk about where the dollar CAD's going from here. Now, yesterday I was working off this little retracement that we had, off this big move that we had on the unemployment number that came out. Look, this unemployment was way off the mark, and we saw this move up, and then we saw this push back. If you look at the Trader's Dynamic Index, it had pushed up here near about the 90 level, and then fell all the way back over towards the 32. But yet, the market itself had only moved down about 35 pips. It hadn't even gotten all the way to the 38.2% level. When the market doesn't hit 38.2, which is the standard profit-taking level, and then hovers right around the 23.6 level or test it, it's going to push higher. That is a sign of continuation. So all the market was waiting for today was, what's Yellen going to say? If Yellen's going to throw the dollar on the bus, then we push lower. And I had anticipated the possibility of the break of 710 and possibly a move down to 690, back to this old resistance level. But that's not what took place. Yellen did make the comment that, hey, the U.S. economy seems to be improving. And so we got that push higher. And if you take a look at this a little bit further out in time, let me go out and take a look at the 4-hour chart. I'm going to give you some thoughts to consider technically as the dollar CAD continues to push higher. Something to consider is this. Price has a tendency to go back to where it's been before. If you've never heard that before, write it down. Price has a tendency to go back to where it's been before, and that has a lot to do with human nature. We like to be in our comfort zone. We like to do things that are comfortable, that we're familiar with. Well, price does much the same. So the thinking is, if this pushes higher, breaks above the 770 level, we're going to eventually see the CAD push back up to that previous low point that's going to put us somewhere in the ballpark between 108 and 108.10. From there, we push up higher to the bottom of this range, which is going to put us somewhere in the ballpark near about 835, 840 level. There's the anticipation by the end of the week, if we get some rather less than spectacular comments from Governor Pelosi of the BOC, I expect the dollar to push higher. And on top of that, if we get continuation in the bond market of an improving yield on the 10-year, we're going to see the dollar CAD climb higher. Now, this isn't going to be a bad thing overall. Think about it. Canada is a bounty of natural resources. Canada is the largest oil exporter to the U.S. Not a bad deal right there. So a weaker CAD is not necessarily a bad thing for the Canadian economy. Now consider some of the fundamentals. Now Governor Pelosi was talking about how good the CPI was last month at 0.5, talking about how good the retail sales number was up 1.1, but he's got a few things he's got to cover now. Consider this. In the last month, we've seen raw material price index down 0.4. Industrial product price index down 0.5. GDP down 0.1. National house price index down 0.1. Another biggie was the PMI number. Now that was down to 46.9. Whenever the PMI number gets below 50, that means the economy is constricting. It's not a good thing. Manufacturing down, not good for the economy. Furthermore, the unemployment rate rose last week to 7.1%. So I suspect tomorrow that Governor Pelosi will come out and speak a little bit more about the unemployment data, probably downgrade some of the growth projections, and be a bit more accommodative in order to drop that unemployment number. Well, what is that going to do to the dollar CAD? it's going to push it straight up. Now consider a couple of technical things too when we step out and look at the big picture. You go out to look at the weekly chart, something I want to point out to you. In my trade room, I've mentioned to traders, look for the market to move in steps of 3. You can look at that in price, you can look at that in indicators. If you look down below, you can see that the Traders Dynamic Index has moved down 1, 2, 3 steps down. It's time to see it move back. My thinking is that the green line representing the current sentiment in the marketplace, it will move back towards the 50 level as the market baseline kind of comes down to meet it. We may get a bounce at that time, but consider this, that if you look at this swing low to that swing high, we've seen the market come back and hold the 618. This is another strategy. This is a 1, 2, 3 up strategy. If the market retraces back to 618% and holds, you look for continuation of the upside. TDI suggests upward move. This strategy suggests upward move. A weaker fundamental basis in the CAD suggests a weaker CAD. Yellen's testimony today suggesting a stronger dollar. I think as an active trader, you're going to be looking for that dollar CAD to push back up towards 108. Well, this is Dean Malone with Compass FX. Hope some of this information will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.